Welcome to Smart Stock Watch. Today is April 23rd, 2025, and we're diving into Texas Instruments' first quarter earnings report. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Texas Instruments, a leader in the semiconductor industry, has just released their Q1 2025 earnings, and there's a lot to unpack.
Revenue and profitability overview. Let's start with the top line. Texas Instruments reported a revenue of $4.07 billion for the first quarter, marking an 11% increase year over year. John, what does this tell us about their market position?
This revenue growth is quite impressive, especially in a competitive semiconductor market. It indicates strong demand across their product lines, particularly in industrial and automotive sectors, despite a seasonal decline in personal electronics.
And how about their profitability?
Texas Instruments reported a net income of $1.18 billion, with earnings per share at 128 cents. This includes a 5-cent benefit not originally forecasted, showcasing their ability to exceed expectations and manage costs effectively.
Cash flow and shareholder returns. Moving on to cash flow. Texas Instruments generated $6.2 billion in cash flow from operations over the trailing 12 months. How does this reflect on their business model?
This robust cash flow underscores the strength of their business model and the quality of their product portfolio. Their investment in 300mm production is paying off, allowing them to maintain a strong cash position.
And what about their returns to shareholders?
They returned $6.4 billion to shareholders, which includes dividends and stock repurchases. This is a clear indication of their commitment to delivering value to shareholders while also investing $3.8 billion in R&D and SG&A to fuel future growth.
Segment performance and future outlook. Let's delve into the segment performance. How did their key segments fare this quarter?
The analog segment, which is a major revenue driver, saw a 13% increase to $3.21 billion. However, embedded processing experienced a slight decline. This mixed performance highlights the varying demand across different sectors.
Looking ahead, what is Texas Instruments' outlook for the next quarter?
For Q2, they project revenue between $4.17 billion and $4.523 billion, with EPS ranging from 121 to 147. This guidance reflects cautious optimism, considering potential market fluctuations and tax rate adjustments.
CEO insights and strategic initiatives. What insights did CEO Javi Villan share regarding their strategic direction?
CEO Javi Villan emphasized their strategic investments, particularly the $4.7 billion in capital expenditures, which are crucial for expanding their 300mm production capabilities. This focus is expected to enhance their competitive edge and operational efficiency.
And how does the expected tax rate impact their financials?
They anticipate an effective tax rate of 12% to 13% for the next quarter, which is a slight decrease. This could positively impact their net income and EPS, providing more room for strategic investments and shareholder returns.
Key takeaways. In summary, Texas Instruments has delivered a strong performance in Q1 2025 with significant revenue growth and robust cash flow. Their strategic investments and shareholder returns highlight their commitment to long-term growth. John, any final thoughts?
Texas Instruments is well-positioned in the semiconductor market with a solid financial foundation and strategic focus on innovation and efficiency. Investors should keep an eye on their future developments, especially in the analog segment.
Thank you, John, for your insights. And thank you to our viewers for tuning in. Don't forget to like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Texas Instruments' performance in the comments below.